Amazon.com in paperback and Kindle versions. So let's get to our live action screen. We have the Forex-Trading-Unlocked.com website pulled up, and if you go to our products, courses, and services tab, you can pull up the high probable Japanese candlestick patterns page, and on that page we have a video that you can watch that will describe the different patterns and methodologies and things that you'll learn in the book. We also have a little copy of the book on the web page here for high probable Japanese candlestick patterns, where you can either buy it or you can share it, but first you can preview it and check it out. And then at the bottom of the page you can also join our email list and subscribe to that if you would like, and you can also find access to other parts of our website from this page as well. So one of the reasons you want to read this book is so you can learn how to trade these signals. Now if you look at the US dollar Swiss chart from recently, we had a bullish engulfing line buy signal that had occurred here back on November 9th. We also have today a buy signal forming. The trading day is not over yet, but if this market settles where it's at or higher, that would complete either a piercing line or another bullish engulfing line buy signal. If you want to learn how to trade these buy and sell signals, then you go back, like I said, to our webpage and access high probable Japanese candlestick patterns, preview it, and start learning on how you can actuate these actual trading signals. Now, ironically, Japanese candlestick patterns, which obviously come out of Japan, these methods have been used for over 400 years to trade the stock markets, Forex markets, currency markets, option markets, you name it. Well, recently, when we had back in November, we had a bullish engulfing line buy signal here that had stamped a nice low on a daily basis. And now we have today, we have another high probable Japanese candlestick pattern forming, but we have to wait for the close and for follow through. Now, if you want to learn how to apply these trading signals to either your system or to use our methodology, you read the book High Probable Japanese Candlestick Patterns, and you'll be able to find out how to actuate these trades. Now, these signals, they occur often in many markets. They happen all the time. Just as you can see, just in the month alone of November, we had here in the US dollar yen trade, we already had a bullish engulfing line buy signal formed. We have another pattern forming here. We go back to the US dollar Swiss, and we have one forming again. And one of the nice things about knowing these signals, especially like on a day like today, when you have the US dollar Swiss and the US dollar Japanese yen forming signals at the same time, they're not always the same signal, like a bullish engulfing line or a piercing line or whatever, or maybe that's what you get. In one market you have a bullish engulfing line, another one you have a piercing line, but when these all line up, that gives you a good sentiment about where, especially like the dollar would be going, because all the currencies are based off of the dollar. When you have a signal, say in the US dollar Swiss, the US dollar JPY, and then also say in the Euro US dollar, if you all have buy and sell signals where for the dollar or against the dollar, and they all line up on the same date or around the same date, well, that's usually a good indication of where dollar strength or weakness is, and you can use that for options plays, for spreads, for futures, as well as the outright Forex markets itself. These can also be used in stock markets and what have you as well, but especially in the currencies, they work fantastic because you don't necessarily have to be a yen trader or a Swiss trader or a pound trader or whatever you are, but if you are trading, let's say you're a Euro US dollar trader, and all of a sudden we have this US dollar buy signal for the Swiss, and you also have a sell signal in the pound, you have a buy signal in the US dollar yen, odds are that the Euro US dollar will be trading, in, at least in the short run, if there's a dollar buy signal or a sell signal, that will follow through with that as well. So we'll have to learn more about that when you read the book. Or you can subscribe to our YouTube channel, Forex Trading Unlocked, because we have videos that post all kinds of analysis on the daily and weekly basis, and whenever we have trading signals from the high probable Japanese candlestick pattern book that evolve, we usually highlight them in a short-term video, which you can find by subscribing to our Forex Trading Unlocked YouTube channel, and we have all kinds of them on there. And also, once again, check out the book High Probable Japanese. Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked. We are here on February 24th, 2021 with a Forex market analysis for you. Alright, we just want to show you our disclaimer real quick to remind you that this video is for illustrative and educational purposes only. Also, we'd like to remind you to like our video and subscribe to our channels on YouTube and Twitch. Forex Trading Unlocked is the channel. Also, check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Alright, we have the Forex-Trading-Unlocked.com website pulled up, and from our navigation bar, if you pull up products, courses, and services, you can get information on the book High Probable Japanese Candlestick Patterns right there. We have the workstation page pulled up, which you can get from our nav bar also under Market Analysis and Education. And we're going to toggle down past the numbers. We have the U.S. dollar Japanese yen up first today. Why are we talking about the U.S. dollar Japanese yen? Well, like a balloon underwater, this thing is making higher move highs. On the hourly, on the daily, we have planted a higher move low as of yesterday, and we are falling just below this high right here, which is going to become a key level to cross. Now, are we going to hit this today? I don't know. We may. One thing that you want to look at here is that we had this rounded bottom here with the head and shoulders that set us up for this current correction to the upside. We've been in a bull market for the U.S. dollar yen trade since the beginning of January. This is one currency where the dollar is maintaining its foothold of strength right now. So it's kind of cool to watch how this is going. And we've had divergence in the major currencies over the course of the last couple months. So interestingly enough, where the dollar bears seem to be on their bandwagon right now in a big way, in certain currencies, certain major ones, it is not so. All right, so what are we going on? What is going on right now as far as targets? So 106.22, the recent high over here from last, I believe it was Wednesday. That is definitely our short-term target to the upside. As far as where can we go with this? Well, let's pull up our Ninja Trader chart. Where do we have the U.S. dollar JPY? Okay. So we have the U.S. dollar JPY trade right here. All right, so let's clean up this. We don't need this price projection, and we don't need this one anymore either. All right, so let's move this over here. Now, if you want to download the Ninja Trader platform, you can go to Forex Trading Unlocked to our homepage or any of the or under tools and stuff like that, and you can download the copy of the Ninja Trader. All right, sorry, I had to move that around. Okay, so we planted this low yesterday. So as just a nice little risk-reward targeting, this low actually happened to be a short-term buy signal as well. So we're going to use a little risk-reward from the close of yesterday to the low. And as you can see, we already came through our target today. So interestingly enough, does that mean that we are now going to reverse gears on the day with this? Absolutely not. That doesn't mean that at all. What it does mean is that we are an aggressive bull right now with this market. Okay, so now I said in the beginning that a lot of the other currencies, we have divergence going on, so you got to be careful with being a dollar bull right now. However, interest rates are flying right now. Gold is also crapping out. That's a big deal. So we have our target here from this buy signal. We've already taken that out on the day. So as far as a daily target, right now we're looking for a challenge of this high right here. I think overall the yen has a good chance at hitting up to around 107.5 to 108 over the next few weeks. And here is one of the major reasons why. Let's look at crude oil. Crude oil continues to rally and make new highs, okay? This is not stopping. Here's another thing to take a look at. The U.S. 30-year Treasury Bond keeps on falling and making newer move lows. In fact, today the U.S. Treasury Bond market is down to 160.27. This is very big when it talks about when it relates to currencies. So why am I bringing this up to you? Okay, well, first of all, a crashing bond market in the 30-year is pushing the spreads, meaning that the banks and the Fed are at next to zero interest rates. Those interest rates are priced at their ceiling right now. The 30-year is falling through the floor because the market is dictating higher rates. So the spread between the short terms and the long terms is very, very high right now. This is a factor in currency pricing. Okay, so right there, that is strong for the dollar right now. Then we have the fact that gold is completely falling apart. If you look at this gold chart here, this is continuously making lower move lows and lower move highs. The gold chart looks a lot like what? It looks a lot like the yen chart upside down. Now, not completely, but as a whole, there's an inverse relationship to gold pricing and also the yen right now. A lot of this has to do with the interest rate variable too. As interest rates go up, the cost of carry and production of gold also goes up. As the price of oil goes up, the cost of production for gold goes up. Also, here's another thing too is you wouldn't think that it would impact the Bitcoin industry, but also these interest rates hitting lows like they're doing also is starting to affect the cryptos as well because of the valuation. So now remember, most people think of Bitcoin as a currency. It's a store of value right now, like gold. I wouldn't call it a currency, even though it's used as a means of exchange, but then so is gold, just not to a high degree. So I think it's more in a relationship like that. So as long as gold continues to make new lows, as long as the 30-year continues to make new lows, most likely the US dollar yen trade is going to remain a raging bull. Okay, so that doesn't mean that this is going to fall out for all the other currencies, but definitely right now for you yen traders out there, I would look to basically see this market go up to probably 106 half, 106.75 in the short run, probably fall off that. I would expect things to get a little dicey as you make new move highs, kind of like it did here, where we'll explode to the upside. We'll have a nice sell-off of profit taking as dollar bears come into the, like when we have the dollar trade completely in play, meaning all the currencies are rising or falling versus the dollar, that's when you'll see these sell-offs right here. However, as other currencies remain strong, this is the opposite going on. The yen, no matter what, seems to US dollar right now is in a very bullish, strong phase. So now let's look at the Dixie real quick, the dollar index. Yesterday, the market had made lower move lows, but it settled higher on the day as far as the index value is concerned. This is big because the dollar right now, there's a lot of dollar bears out there saying the dollar is going to collapse, which it very well may be, you know, but in the short run, I think we're looking for, because of this divergence, we're going to see a nice little bounce in the currencies. So let's look at the Euro US dollar real quick. Euro US dollar is falling off of a higher move high yesterday. It's slightly lower on the day. This right now is a range trade here between this $21.71 and $20.18. As long as interest rates keep on going higher right now, I think the Euro US dollar is likely to take a fall back down here, test this upward sloping support line, and then test this $20.18 with, if there was a failure there, then we will start to have some signals and have some levels for you. But right now, I'm looking for it to be a little bit of a range trade here. British pound US dollar, let's see what's going on here. All right, the British pound US dollar really spiked higher today, giving the dollar index a little kick on in the face early to start the day, but now it's on its lows. Dollar is gaining strength. Why is this? This is because of this. The 30-year Treasury bond market is now down over a full dollar basis handle, which now is trading at 160.27. Because of regulations, we can't show this in real time because you're not, unless you're registered and paying for data for futures, it can't be in real time. So as you can see, just on a day, it's down. I said 161 handle, so now it's really 160 handle, so it's down from 162 to 160. So that's over 60 pips. Almost 60 ticks in the Treasury bond market just today alone. As long as that continues, you're going to most likely see this dollar strength resurgence coming back. U.S. dollar Swiss, let's take a look at this. Breakout to the upside. Look at that. You cannot deny this strength here. You have the US dollar strong against the Swiss and strong against the yen. Those are two flight to quality currencies. If the flight to quality currencies are weak against the dollar, which is the other flight to quality currency around the globe, that's why you're having this rally. This is a big breakout to the upside. I would not underestimate this trade right here. So as far as where is this one going to go, well, we're going to take a look at our Ninja Trader setup here. We blew through our buy signal from the other day. Yesterday we peeked through it, and then we bobbled around it today, and now we've extended this target. We're going to have to wait for the close of today to really figure out where that next target's going to be. We have some longer range ideas, but we have to wait until the close to get the final value so we can come up with those targets. So we'll have those for you after the close of today. All right, let's go to the Australian dollar, US dollar, since we've already looked at the US dollar yen trade. As you can see, this one is starting to run out of gas. However, this is an oil-related trade, so that's why the pound is so strong versus the dollar. The Australian dollar is also very strong versus the dollar. This is the divergence that I'm talking about. It's going to be hard for the pound to sell off with the rising oil prices. It just ain't happening. The interest rate variable is not strong enough yet to slow the pound down. Australian dollar, the same as goes for this as well. As long as oil continues to buffer new highs, it's going to be really hard pressed for dollar bulls to come into any play whatsoever. So right now, this is getting kind of just dicey and choppy. There's really not much action going on in it, so we're not going to really get into this one until we get a signal. Don't fade that trend. New Zealand dollar, on the other hand, this bull really wanted to press new highs today, and it still is. Is it playing catch up with the Aussie? I don't think so. I think it's just the fact that this has strength too. No matter what, even if the dollar becomes a bull overall against most currencies over the course of the next 3 to 6 months, I think that it's going to be really hard pressed once again, just like the Australian dollar, to hit this currency as well because of the price in oil. Should we see a big sell-off in oil, that would change our outlook, in which case then we would be bearish from the short run with these currencies. US dollar Mexican peso made a really big move to the upside this week. Reverse gears yesterday. Today it looks like the profit taking's over, and now dollar strength is coming back into the market. That's establishing a higher move low maybe after this higher move high, and if we take out this high again, that really solidifies the current uptrend in the peso, which right now we're targeting around 21.5 to 22 pesos to the dollar over the next couple of months. US dollar Canada, let's take a look at this real quick. This one continues to get pounded. This took out the low from a couple days ago. This is a falling rock, my friends. As long as oil keeps going up and interest rates keep going. Interest rates is kind of a neutral one on this one, but as long as the oil picture continues to go the way it's going, especially with heating oil and natural gas and a bunch of other things as well, I can't see this thing being anything but a continuous free fall. Remember, this market's been a bear for months, weeks, days, hours. The whole thing, the whole kit and caboodle is very bearish. The euro US dollar, like I said when we started this video, this one is the one that's really neutral. So the real trade to watch, I think, is going to be the US dollar Japanese yen trade. Right now we have a lot of divergence and shaking up. So is the dollar bullish? Is the dollar bearish? Well, it depends on what currency you're talking about right now. It's going to make things very interesting. The dollar index, as long as the yen and the pound, or excuse me, the yen and the Swiss continue to fall versus the dollar, and as long as the euro also is under pressure, that's going to give the dollar index a false lift, but not very much, because the pound is the second biggest weight in the dollar index, and that, no matter what, I think is a raging bull. Do not try and jump in front of that freight train, my friends. So I want to thank you very much for your time today. Don't forget to subscribe to our YouTube channel and our Twitch channel, Forex Trading Unlocked, and read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. With that, I want to thank you very much. I'm Teddy Keckstedt from Forex Trading Unlocked. Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on Tuesday, February the 23rd, 2021 for a Forex market analysis for you. And we're just going to show you our disclaimer real quick, just to remind you that this video is for illustrative and educational purposes only. Alright, so take a look at that real quick. And now one more last thing to look at. We just want to remind you to subscribe to our Forex Trading Unlocked YouTube channel and Twitch channel. Also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. We will be going over some of these patterns today. All right, we have the live action screen here. We have the forex-trading-unlocked.com website up, and we are already have the workstation pulled up, which you can access from the Market Analysis and Education. Just go to Forex Trading Unlocked workstation, and we're going to go down to the chart. All right, we already have the dollar index pulled up, and as you can see, yesterday the dollar index made newer move lows, confirming that this downward trend is now back in motion on the daily. The weekly is kind of neutral. The daily and the hourly is now bearish. However, if this is, let's just say that this is the beginning of a turn in the dollar. If that's the case, then we would be looking to bottom over the next few days to a week or so, and then make a run for higher levels. So it'll be interesting to see how things pan out. Remember that a lot of things that are going on with the pound, or with the British pound especially, are influencing the dollar index really heavily, meaning that the pound is having a big rally versus the dollar, and so are some other currencies, but they're not to the weight that the pound is, considering that it is the second largest currency in the dollar index. So we will watch this, and let's see if we can find out whether the dollar is getting ready for a bullish turn, or if this is just the beginning of another major dollar sell-off. Today we have higher move highs from Euro US dollar. As you can see here, we took out this $21.71 level. This is key. Now, poking new highs confirms, obviously, that the trend is higher and stronger and bullish. However, we're barely making these new highs. So let's see. I think if we pull up our, let's see, where is our Euro US dollar chart on our NinjaTrader platform? Okay, we have an extended upside target of $22.43 up here. So that would be coming off of this low that we had set up here just a week ago. So now the market has confirmed that it has made a higher move high after a higher move low. So that's indicative of what? That means that we are confirming the higher move trend. Now remember, the monthly is a bull. The weekly is fairly neutral, but definitely the daily is now becoming bullish again on the Euro US dollar, and so is the hourly as well. There is a bit of divergence between many of the currencies and the dollar, so it's not that everyone is just a bear versus the dollar. I would use caution with the euro. I think the pound will have a better chance of accelerating than the euro does, predominantly because of the oil trade. The trade in oil being anything above $60, especially as I wouldn't doubt that we're going to see $70, $75 oil by this summertime, let alone $100 before the fall, or even definitely before the year is out. And if that's the case, the euro is going to have a lot of trouble. The pound actually will not have so much trouble. So you're going to probably see, even if the dollar is a bear continuously moving forward, that the euro will not gain quite as much as the pound, because they have many geopolitical issues within the EU, which now the UK no longer has to deal with. So let's see, Euro US dollar. Do we want to buy this thing, or do we want to sell this thing? Well, let's take a look at the other currencies, and then we'll figure out if we have a real predominant strength here, because we know versus the pound it doesn't. So British pound, US dollar. Let's see what we got here. All right, this continues to make new highs. This one here is a raging bull, and I have to tell you, like, as long as oil keeps going up, this is not going to stop. It is. I mean, now the slope right here is pretty strong. So let's take a look at how the pound is versus some other currencies real quick. So let's see the British pound versus the JPY. Look at this trend, folks. Okay, so now you know where the strength is coming from. Now think about this. As oil stays where it's at or goes higher, that's hard for the yen. So that means the yen is going to definitely be weaker versus the pound, just on an oil factor right there. This trend is very aggressive. Let's look at the British pound now versus the Canadian dollar. even versus the Canadian dollar, and the Canada has a very big oil trade in itself. So that also tells you a lot about the British pound strength that's going on in the market. Let's look at the British pound versus the Australian dollar. Australian dollar, a little more neutral, but remember the Australian dollar is a heavy commodity country as well as with oil, so that kind of neutralizes that trade. So let's get back to the British pound, US dollar, and you can see where this strength resides. Okay, so now I think on our Ninja Trader platform here, let's see if I don't think we had any upside targets here, but we could actually set one here. See, here's the thing is that we had a extended continuation buy signal that had occurred a week ago. Let's see what we can do here with our risk reward here. So we initially had, on this day, we had a buy signal, but we took this out already. So what I think we're going to probably see happen over the next couple days is, well, the oil numbers are coming out tomorrow, Wednesday at 9:20, something like that, Central Standard Time. If those things can help to subdue things with the pound, then it would come in around Wednesday with those numbers, especially if there's a lot of supply and because we have a lot of issues with weather, obviously, with Texas and things like that in the United States. So we're going to continue to see that this will probably maintain its buying momentum and pressure highs. I would say 142 to 143 is not out of the question. If we do fall back, I think you're going to find a lot of support down here around this $1.38 level. So we have a lot of strength in that European currency. So this is driving the dollar index. Remember how we started with the dollar index. Now let's look at the US dollar Swiss. Now the US dollar Swiss, we had a bullish engulfing line buy signal. So this goes counterintuitive to the trend with the other European currencies. Right now, we have the US dollar that is gaining versus the Swiss. Remember, the Swiss is a flight to quality currency, just like the yen and the dollar. Swiss being one of the most neutral and biggest currencies for that. However, you can see that with this neutrality and lack of bearishness on the Swiss's part, like it tried to yesterday, but what did it do? It made a higher move high after a higher move low. We have this bullish engulfing line buy signal here that confirmed a higher move low on this correction. So we were looking from January up until now as this being an upside correction with the dollar versus the Swiss. And this is where I'm telling you we're going to have a lot of divergence come into the market. So as the pound continues to go and make new highs versus the dollar, it's very likely that the Swiss will continue to make a run at resistance. Not in a big way, but it's very likely to continue to make higher move highs. After all, it has been doing nothing but make higher move highs and higher move lows. That is the trend. You want to stick with the trend until you have a confirmation otherwise. So as far as targets, what do we have here? So for the US dollar Swiss, we have, where do we have it? We have right here, the US dollar Swiss. We have a short-term upside target here of 90.48. That's just above this recent high over here. That would confirm higher move highs and most likely would stimulate fresh buying. I wouldn't get overzealous on any extended rally for the Swiss. I think you're going to see it start to get a little choppy, and I think you'll have sell-offs like you've seen here as it makes its move higher. Like I said, I think you will see divergence with this, as well as that's why I think the euro also is not going to be as strong versus the dollar like the pound. And should you think about this, if the euro starts to fall back and does not continue its rally and all of a sudden becomes bearish versus the dollar, then and the pound stays bullish, which most likely it will, it's very likely that the Swiss won't move too radically to the upside just because of that disparity and divergence of the European currencies. So, but we are looking for it to pressure resistance, challenge this high right here. Once we break through there, then we'll have to come up with some other ideas on what's going on. So the US dollar JPY, let's take a look at this right now. We have a little bit of a turnaround Tuesday. We pressed lower move lows. However, we didn't even come down to tag this upward sloping support line that is maintaining the trend. I personally think that no matter what, even if with the pound going, with the oil trade the way it is, that it's going to be hard for the yen to gain much strength versus the dollar right now. So I believe that you're most likely seeing that this is a profit-taking sell-off that's starting to turn today, we'll watch the numbers tomorrow. Maybe we spike another lower move low, but 104.70 I think is your base. Definitely only a failure of 104.40 here would have us on the bearish campaign again. Otherwise, we're looking for a reason to buy. So we'll see what happens with the close today. If we have a positive close today and then we get a rally tomorrow, that would be a good indication that we're going to see another move for at least a challenge of this 105.76 area. The slope of this trend is not that steep. It could come out. It would be a little better if it was a little more gradual, but it is having good corrective moves and maintaining this slope. I think that the strength is there in the dollar versus the yen. So let's see what we have here on the Ninja Trader. We have our downside here. We have 104.68, which comes right into that one extended point. We have to wait for a turn to figure out whether or not we're going to have a buy yet on this one. So we're waiting on this one, but it's coming close. We'll see how it settles today. Let's see how everything else is going. Now look at this. This also helps us with the Asian trade zone with Australian dollar, US dollar here, making higher move high after higher move high this week. But today it's starting to run out of gas as we're talking right now. It's actually going a little bit negative. So we'll see how this pans out. Right now, this is a bull that's broke out to the upside in a nice way. This market has been a bull versus the US dollar now for quite some time. So it's going to be very hard pressed to. You don't want to jump in front of a fallen knife when it's when the market's breaking, just like you don't want to run in front of a freight train as it's climbing up the hill here, because it just is not stopping. It's grinding higher. I would look for a reason to buy a dip later than to try and sell into this move right now. If we get a turn in the oil numbers tomorrow and you see a sell-off in oil, which, by the way, we'll take a look at this right now. We can see when you go to the forextradingunlocked.com website, you go down here to the markets tab, and we can go down to commodities over here. Now, this is a good way to get a reference of the futures, as well as then tag it into the basis of the cash markets. So here we just pulled up the crude oil chart. And as you can see, yesterday we had a big move to the upside once again, challenging, getting ready to get above 62.5. So let's see where we're at right now. If we go to the CME website, go to market data, we go to energies. Let's see where oil is at right now. Market data, energy, here we go. All right, here we go. Crude oil futures, they're down slightly. So they're at 61.41. So basically we're just below where they settled yesterday on the daily basis. So as you can see, they're hovering right there. That's good. That's going to keep the Australian dollar, US dollar pressing highs. Now, is crude oil going to only go one way? Is it going to have any decent sell-off? Well, I think just the momentum is just really there. It's hard to fade this stuff right now. So especially with the new policy for oil in the United States being that they're going to stop drilling as soon as they possibly can. So New Zealand dollar, US dollar, this oil trade is helping it as well. This one popped. This one doesn't have the strength and resiliency as the Australian dollar does, but it is close. I think no matter what, even if you have a dollar bull versus certain currencies, especially even like the euro and the Swiss, it would be hard to continue any big sell-off in the New Zealand dollar, just like the Australian dollar right now with the rally in commodities. Should we see a dip in inflation where things start to slow at least, but right now it's on an accelerated path. We've gone to red line on the inflationary. We've seen more inflation in the EU in just the past 2 months, well, actually in the month of December, than in the past 4 or 5 years. So that just tells you right there as far as what's going on with them. And I don't know if you've been to the gas pump lately, but I just filled up this morning and was noticing that the average gas price now is over $1 higher than it was at Christmas time. So, and pretty much over $1 than it was a month ago. So that's how fast that's trickling into the economy, and that will definitely have an impact as we move forward into the second and third quarters. I can't see how that will not start to slow economies down, because earnings will start to get affected. All right, U.S. dollar, Mexican peso, we had a breakout to the upside. Look at this, a little sell-off today. I think this is just a profit-taking move right now. You had a higher move high after a higher move low. This market is in a long-term neutral, or medium weekly term neutral, long-term bearish on a monthly. Daily, it's short-term bullish, and hourly, it's rather neutral to bullish. So we're looking for higher move highs. We just confirmed higher move highs with keeping the upward trend intact. So now we just key off of these levels. You can move this resistance line up to the high from yesterday. This would be our next breakout point to the upside. I would say that since we now have confirmed and broken this downward sloping trend, that right now we have confirmed neutrality, and we are looking now to follow this upward sloping support line. So we'll see how this unfolds. We don't have any price targets for you right now. We've already hit them. US dollar Canada. Let's take a look at what's going on here. This one is a grind. This one is so tough. With oil going higher, it's hard for the dollar to rally versus the Canada, especially with the way things are just, there's no reason for us to get any type of really bullish momentum on the dollar. However, this trade is beaten up. So to the downside, I'm not looking for much. What I would do is wait for a rally to sell. By attrition, we can come through this downward sloping resistance line that's keeping the trend intact. But this is only the short-term monthly trend intact. So, I mean, by attrition, we're going to go out of this. It doesn't make confirmed strength or even neutrality for the U.S. dollar Canadian trade. I just think that it's been so overdone that we're stretched to the point where it's very hard to continue to just slam new lows. Like, you see in slides like you had back here in November and in December, those were something I think that right now, I don't see this where we're at right now continuing that harshly. Now, should oil all of a sudden continue to climb over the next few days, especially if the numbers that come out tomorrow are very bearish, and all of a sudden you see oil at $65, $66, $67 a barrel by the end of the week or next week, well, then you're going to probably see the Canada back down around $1.23. So we could see a slide that would equate to something like this that we had in November into December. For the overall break here, this market is making lower move lows and lower move highs, so it is in a bearish trend. So be mindful of this. I think you look for rallies to sell than trying to catch a falling knife. Unless you got a valid buy signal, the one good thing is you just risk the current lows. And then, I mean, like right now, I guess a low-risk bullish trade would be to get long versus the low from yesterday. Below 125.81, you don't want to be long. So that's just the way to look at that one. Let's see, do we have any questions out there? It doesn't look like we have any questions out there at all from anybody. We got a little bit of participation, some remarks there on YouTube. Nothing on Twitch. You guys are quiet today. So, all right, let's go back to the Euro US dollar. So we figured out where the British pound strength is coming from. One, it's rallying versus pretty much every currency out there. So if you're looking for a currency that's strong right now, it is the British pound. Euro US dollar looks like it's kind of lagging as far as, let's look on the hourly trade. Yeah, it's looking kind of weak. I don't know. We're heading, US markets are only open a couple hours now. And you have the Asian markets that are closed, European markets that are closing. So we don't really have much to look forward to. I think what like you have to really watch out for is this $21.71 area. And if we can get above there, buying will probably build, but I don't think it's going to be explosive. Short term, maybe on the hourly, you could sell right now against the high here at 21.80. You know, it's a low risk sell, I guess, but I don't think you have very much to the downside. Maybe down to 21.20 from here today if we start to continue to go lower. And if we do that, then you're just looking at a correction like this before we start to probably go higher. So we'll see how this manifests. It's been a good week so far. We've had some interesting momentum to the upside. The dollar definitely is getting stirred up, and the bears are having their fun. So remember to watch out for the oil futures and also with the interest rate futures as well. The way they are pounding lows, that also makes it hard for the dollar to sell off too extreme versus a lot of currencies. That's why I think you have to be mindful of the commodity-driven trade. And if somehow we get some big sell-off in oil, I mean, God forbid, the Saudis and the Russians start to try and flood the market with oil again like they did a year and a half ago, you know, that would be something that, shabam, that would really drastically lower the price of oil, because it would take our demand off the fact that now we are no longer going to be an exporter, especially after the new rules, executive orders. We are now going to be a net importer of oil once again, which means we don't want to be paying high prices for foreign oil. So hopefully the foreign oil will help drive domestic oil prices lower, if they start pumping. But I don't know. We'll see. Right now, I think that they got a stranglehold on the United States. So why would they, start to work with us now? So I don't think that's going to happen. So be mindful of that. Watch the interest rates, and then also watch forex-trading-unlocked.com any chance you get. Also, don't forget to subscribe if you haven't already to our YouTube channel and our Twitch channels. Also, check out the book, High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback and Kindle versions. And if you read that, you can learn how to trade these candlestick patterns or incorporate them into your own systems that you already have working already. So I want to say thank you very much. I'm Teddy Keckstedt for Forex Trading Unlocked. You have a good day. Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here with a plug for a book called High Probable Japanese Candlestick Patterns. Before we get into that plug, we just want to give you our disclaimer real quick to remind you that this video is for illustrative and educational purposes only, although it is a promotion for our book. So before you do that, also, we want you to subscribe to our YouTube channel, Forex Trading Unlocked, and now we will get into what the book is all about. High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. So